Alright, we'll give that a try. I found it. It was a stream latency thing where it was supposed to make it faster and the normal supposed to have better video. So it may have been the YouTube thing. We'll give that a try. I think everything else should be good to go now. I hope. If you join back up, just let me know if anything's any better. No, there's just a little bit of a delay, so I'm going to wait for a second. This is probably a little bit longer delay uh, due to it being a little bit more latency. Hopefully for a better video, though. If it is, we'll get started. Let me see, is that the right one? I don't know if that's it or not. Trying to take a look now. Alright, and hopefully that'll be a little bit better. Actually looks a bit better on the phone, so hopefully that should come out a lot better on screen as well. I'll keep my phone up, that way I can keep an eye on the comments a little bit closer. Okay, and we're chat filter, all messages. Okay, so hopefully I can see everything. Alright. Give everybody just another moment to join in. I'm going to go ahead and set up a few things while that happens. Just looking at a few different levels and points of interest. They don't really have any predictive power like I've kind of notated in the videos. It's just more of a reference. I can't do that. MT4 is not quite as flexible as the tester. Okay. And can everybody hear me okay? See me okay? Is everything looking good? Remember to choose the higher video quality setting. Uh, hmm. Okay, sounds great. I know on my phone I always have to hit the gear icon in the top right and then hit higher video settings. It, for some reason on mobile, will default to like a 320 or even a 180p sometimes automatically, so you have to kind of force it to upgrade a little bit. Appreciate you letting me know. And everything's looking good, sounding good, so it should be good to go. I'll go ahead and get started. So today I released a video a little bit earlier, and it kind of proposed a little bit of a different concept that kind of combined trading without a stop loss, which is, I've noticed, is starting to become a little bit popular. And then also the way a new trader typically trades. And then I got to thinking about, okay, well, I have a lot of trades that I've taken. I've actually been taking a lot of very tight stop losses, trying to look for that sniper entry and work on sniper entry tactics. And basically, I started to notice a common trend that you would get the direction right, but you would get stopped out. So basically, I come across another video on another channel from UK Spread Betting. He is also a scalper. His videos are from a couple of years back, but I was just, if it can be measured, it can be improved. So I'm always looking to improve it. But basically, there's $25 in it. So not much, can't really do any damage. It's a 50 to 1 leverage. I can buy 1.01. So I just have to manage my risk and see if I can grow this account. It's basically like Netflix or Hulu is to most other people. It's entertainment. And there's never a rerun. So, fun for me. So what I'm starting with up top is I've got the hourly chart started. I've got the other charts set up. I've already got the tick chart running. I have the depth of market set up over here. I'm just basically using that for the basic buy and sell buttons. I don't get any volume information, so this ladder is really kind of useless. I hate that I can't make it much smaller, but that's what it is. But basically, I'm just using these buttons here to trade, kind of like it was in the video where I was doing the scalping. All right, let me turn off the forward advance, and I'm going to back up. I don't really take much relevance in this, like I stated in some other videos. I kind of look at this more as a range. It's going to deviate slightly, so I'm going to just mark out a couple of little points on it. I'm not really going to take anything right at that level or look at anything right at those levels, but that's basically what I'm going to keep in mind while I'm zoomed in to the 1 minute chart. So there's not a whole lot going on up here that I can determine. Everything's been choppy. Everything's kind of sluggish and slow. I might pull. I use way too many softwares. Let's see if that's the right one. Yeah, that should be the right one. Okay. I always mess up on TradingView all the time because I'm constantly hitting the spacebar because that's what we're doing in Forex Tester 6, and then that actually just cancels the replay in TradingView, so I end up doing that quite often. So I'm going to look at that trend line. I'm going to go ahead and just pull this up because we still have the London Open about to happen pretty soon. And then I've also noticed this with trend lines. They do tend to respect angles on the euro. So I'm sitting and considering that if I get something, let me see if anything works along the lines around here, something like that. Not really. That's kind of tight. We got something there. We may have a channel pop out of this or something later on down the road. It's a little bit of a variation on a Gann grid, but I'll lay out some marks so I know where some other things are just on a angled plane. This isn't really necessary, but I'm just laying some of this stuff out for reference. This way I know, without zooming too far out, exactly what's going on, and I can kind of stay further in on the lower time frames without constantly having to pop out of the 1 minute and go back and look. Alright, got the laptop charging, so we're good to go there. Oop. Hey, don't you disappear on me. There it goes. Alright, so this is basically what I'm looking at. Overall down pressure in the market. Technical difficulty, sorry. Overall down pressure in the market. And then I'm just going to basically go with a short bias. Did a quick scalp on the long and kind of floated around with a couple of little trades in the pre-market, open market, and Asian session. Just was a little bit of warm up for fun. Been playing around a lot on this account. Did a lot Friday. So Keeping this account basically just on the back burner for fun. Do a lot of different ideas and testing. I don't really use a demo too much just simply because of psychology. You pay for it a little bit if you're wrong and you're doing the wrong things or you're not winning, but I think it's honestly better because you always need to work on every part of trading. Psychology is the majority of it, so it's always a good idea to basically keep your wits about you on all aspects. So I'm more fond of keeping a small account and trading with a small amount of money, 25, 50, $100. Some brokers will may require a minimum deposit of 250, but use these small accounts to work on your skills, practice, and do a lot of different techniques and testing. Let me see. I need this. So save that. Yes, and then just saving and loading the template to transfer it over. There we go. And ticket forward, and there we are. We're in business. But this way, you don't lose a lot of money if you're doing the wrong thing. You don't end up having a whole lot of issues with, making your bills or having your fun money or whichever way you want to look at it. So you can, and then with everything just basically being all relative, that's kind of something I kind of touched on with hedging as the numbers and math being completely relevant to each other. But just like your risk management, your sizing, your attitude towards the trades, your amount of work that you're willing to put in for the analysis, all of these things are related as well. I mean, it sounds like a lot of work for a little bit of trading, but if you want to be consistent, that is going to be one of the key things to do. So get into a routine and just basically try to stick to that routine as best you can. Can't zoom in anymore. I have to do it that way. All right. And that's the 5. Zoom that guy in. And is London open now? Doesn't look like we're going to get much of a stop run. It may be actually kind of a slow day. But I'm going to look to probably take a short. I'm looking at this little setup, this little reaction here where it was using it as support for a little while. I did notice some big ticks upwards, so that's why I went ahead and scalped earlier off of the last part that I called out in the group. I'm probably not really gonna be doing too much with the group. I do want to go live a bit more, assuming everything works out well, and it tends to be well received. But I would kind of prefer, you guys go ahead and ask me the questions in chat that if you have any, and we can actually talk about it. Even though I'm on the 1 minute chart, all of this stuff applies. We can talk about different pairs. We can talk about different time frames, different styles, different ways of doing things. Some people like to hedge, even though it is kind of cost ineffective, I believe, and just seems to be a little bit more headache than it's worth. But um, it's more of a psychology thing, though, but you do end up paying for it. Then there's, different other methods. There's scalping long term. Maybe you like to trade the 15. Some people prefer to use indicators, so on and so forth. So let me see what I can find right here real quick. Uh, do we have any kind of an entry? I think I'm just gonna throw out a short. But I mean, all of the same aspects apply in any style of trading. It's all going to be the same chart. It's just going to be whether or not it's fast or slow, whether or not the data is going to be more accurate with the indicator. If you choose to use those, and just also keep in mind, like I also mentioned in one of the other videos, that uh, the indicators are probably not going to be as accurate on the shorter time frames. One thing to note too, also doing this style of trading with a little bit larger stop, this is one where you're going to probably be working better on your shorter time frames or times where you're going to be observant of the chart. You could still do this on the higher time frames. You'll just be using a larger stop. If you're trading the euro, you may want to go with like a 60 or 90 pip stop, which is going to severely reduce your R ratio and reward. You'll need a much larger target the opposite way to really see a significant amount of difference. This really has its highest effect on the shorter time frames, but in the long term, it is still very effective at choosing your own closeout point, and that's kind of the primary purpose of why I'm using this 40 pip stop instead of trying to snipe an entry here and taking my stop right above this last high. Because who's to say it doesn't just pop up and then come right back down anyway? I mean, we were overall downtrend. We've got a very strong push from the downside. I mean, it's shrinking the chart out flat on the top and bottom almost from a really strong move. So it's very likely this move is going to continue and we're going to see a massive fallout during the London session. If it doesn't, it probably will do it during New York, and it is very likely that this could just be a slow day. It's Monday, it's already open pretty much flat, but I'll work with it and see what works out of it. So right now, I've got the main trend line that we pulled from the larger time. I'll go ahead and go back up to hourly real quick. So that's what I'm going to kind of ride with at the moment. It tried to do support off of that line. Now we're underneath it, kind of pushing down just like a horizontal support and resistance. And then we've got that wick line, which is another one that tends to be a pretty reliable as being strong. There was once a big reaction there, and now there's probably going to be a likely opposite reaction. It tends to play out that way oftentimes in the market, especially with the euro. When you get these little sharp points and pings, they tend to be levels at some point or another. So just something to keep in mind if that is one of the pairs that you're trading. And even during some higher rate sessions, the 1 minute is not quite as chaotic. And the reason why I kind of say that is because you really have to consider how much you're actually zoomed into the price action. Because this whole distance right here is only 3 pips. Or no, wait, never mind, 21 pips. So 21 pips. But these little moves here, make sure I'm looking at the right numbers. But like these little candles, even though they might be snapping around, you're only coming out 1 pip, 2 pips, 3 pips. And this is over the course of 10, 15, 17, 19 minutes. So even though they may look large in the overall scale of things, they're not really that active. It's not really doing a whole lot to begin with. And sure, this is, the open of the London session, it's early week, it may be a slow day, but this is what you're going to see more oftentimes than not. But when you really get a lot of fun out of the market is when we're having some big moves, when we're actually snapping back and forth 20, 30 pips. You can actually use different techniques of discretion, levels. I oftentimes, when the market gets moving like that, I will use just pure momentum and take entries and exits based on pure momentum. Oftentimes, I'll end up catching tops very well or catching bottoms very well, but just like any trader, I'm going to have my bad day. So, unlike when I first started trading, I am aware that I have to cut a loss. So, if it is clearly going against me, I'm going to try to look for the best price to close it. And like I say, that's pretty much the entire idea of having this stop up here. So if price starts to run up here, or if it snaps down and I think it's going to go lower, then suddenly shoots back up, I'm going to close it like right here. I have no intention of letting this price run all the way up to here. I'm going to be closing it right around here and probably flipping the position before then because I'm going to read something out of here. Right now we've got a nice flat spot underneath this price action. It's broken below, it's respected it, Now we're kind of curving around and through it. We're still also in this level that I've kind of picked out. One thing I've kind of been paying attention to, just a little tip or trick: dojis and strong wicks do not always mean reverse. Oftentimes, especially if you look at it in context, it could just be an accumulation of a certain type of order. It could also be a big exit. One of the things I kind of talk about, I don't really stress order flow because it's decentralized in Forex. You can't really get a true order flow sense. But in a price action sense, order flow basically means you have to have orders available. And about order flow, because it's like, okay, if somebody has to buy what somebody else is selling, then how come the price actually moves? And that's because you actually have certain people that are holding on one side, and then certain people that are trying to buy in to go along with it, and then you have other people trying to stop the price and buy in to go long. And then the action that's actually moving the price is the execution of orders. That is traders taking action, that is orders going live, various things like that. Basically, an exchange of money has to happen in order to make this candle move. And then what you have to understand is, in order for a trader to go long from here, someone else must be willing to take a short from here to go down. So if I'm selling short, somebody else had to say, "Oh, the market's going long. I think you're wrong. So I'm going to buy the other side of your trade." And now they are clearly the trade is going against them. They may go out of it, and then of course somebody else would have to need to go long in order to take their order. And if nobody's willing to take it, price will just keep dropping. Their order will get slipped until finally there's some liquidity, some type of limit order action, some other traders waiting right here, just waiting over the buy button in order to take that position or any other position from somebody else up here in order for price to go back up there. And that's basically all you're trying to read out of the price action, out of what you're seeing in the chart. And what I tend to do is I'm looking at that in the most recent action, but I'm also looking at price as a whole. So instead of trying to stick to one specific time frame like the 1 minute or the 15 minute, I am more fluid with what I'm looking at. So I'm going to keep an eye on the 1 hour, I'm going to keep an eye on the 5 minute, and I'm mainly focused right here most of the time. But if I start seeing a little bit of a snappy action, first I'm going to check my clock down at the bottom to make sure it's not the close of an hour. And then I'm going to start looking around at other areas before I make a decision. Okay, do I need to get out of this trade or not? Because right now, my current analysis and everything is still lining up with the market going down. Even though it's moving slow right now, it's still going down and making lower lows and lower highs. It had that little push up there for a minute, but we also had a news report come out that was basically a little bit different than what had been predicted. So uh, it kind of changed the direction for a minute, but now we still have the higher time frame price action traders, and then you also have a few other traders who are probably short here that may be coming out of the market. So if nothing else, should still cause a dip lower. So that's something to watch out for and keep in mind. And we're already kind of getting a very hard struggle to go long. We had a little bit of a level there. It tried to push above and then just fell right back below. And now we're retesting the bottom and going short right at where I entered. So we'll see exactly what happens from here and just keep an eye on it. Price is moving a little bit slow, so it may take a minute to really get things moving. One other thing I'll make note of, I'm usually paying about a 5 to 6 point spread. So on a one lot, that is actually $5 to $6 in spread cost, and then they also charge $10 commission round trip. So this basically is costing between $13 and $16 round trip, so rather expensive for scalping. But the way I'm looking at price as a whole, looking at the actions as a whole, looking at the events as individual and what type of effects they're causing, I can look and trade and trying to look for bigger targets. I didn't take a lot of action right here in this choppiness because it's only, 3, 4 pips up and down here and there. And especially if you're using like a spread account to scalp, or you're using a high commission cost account, if you're trading with Oanda, or any of the other ones that have a fairly high 7, 8, $9, $15 commission, whatever. There's so many brokers out there. I'm not aware of keeping up with all of them, but just keep that in mind. If you have a little bit higher trading cost, you'll also want to remember that when you're trading on other pairs. So, like if you swap to the Danish krone, for example, on Oanda, it's a fairly tight spread considering the pip value. But on other brokers, it's so wide that it just makes no sense to try to trade it, because you're going to have to trade the hourly or even the weekly just to beat the spread because it's so wide. So, just something to consider if you are looking to trade the shorter time frames and looking to trade for scalping. Now, I honestly recommend scalping, but I also recommend to have quite a bit of experience first. So, I think it's probably actually a good idea to practice with stop losses, or use this idea if nothing else. If you just want to jump into scalping, you don't want to try hourly, you don't want to do a lot of back testing, you want to learn some things fast, you will certainly learn it fast on the 1 minute, because all of these motions, events, patterns, things that it's doing, they're no different than what it would do on the hourly. They're just on a smaller scale, and they're moving a little bit quicker. But if you keep in mind to just constantly zoom out, then you're going to be able to see a much larger picture of what's going on. And these little blips, these little major pushes, they're only going to last for a few seconds, and then the market's just going to carry on more in line mostly with the hourly. I really like the hourly because it is one of the most common charts to use. It's also one of the most common strategy focused charts. A lot of traders have jobs, they have things to do, they have families. They can't devote hours and days on end with no sleep to the chart. So, unfortunately, they would have to trade the hourly, and that usually works out the best. A lot of times they'll combine that with the daily or the 4 hour. They'll use the hourly or the 15-minute for the entry. Very often, swing traders will be on between the 15 and hourly. I don't know too many that prefer the 30-minute. I rarely ever look at a 30-minute chart. It's usually going to be the 1, 5, 15 for the main focus. Higher time frame is usually 1 hour. Occasionally I'll look at the day, but I use the period separators and just kind of eyeball the high and low and kind of see what kind of a candle. So, for example, in this example, we got a small wick. We opened here. We've got a small wick area. That's about roughly 26.5 pips. Then we have a red body with a full bottom red close, very small red wick. So it's very likely that this day is going to also continue down. So that's another reason to have a down bias, because we have a very strong downward day. I don't even have those on. Let me see if I can add that time frame. I'll show. I don't really too much worry about going too high up because the world is different every day. So let me see. Let's go to daily. Zoom that in a little bit. So there we go. Yesterday, small wick, large body, small wick. So it's very likely that this is going to continue down. If we also take a look here, we've got a trend line. So one of the recent videos, I talked about a negative x plus x equals 0. This is our negative x against the sell side. This is our positive x against the sell side. So that doesn't count anymore. Now it will count if price comes back up. It more than likely will be support right here if price gets above it. Just a common thing that I've noticed as being a pattern for that type of little candle setup right there. It's a little outside the box thinking, but more often than not, it will set up and work like that. Now, whether or not it goes long and higher from there is to be determined, but it will, most likely 90% sure, it will use that as support or resistance later in the future. And because this is a bearish pattern, more than likely the top of this wick and the top of this wick, this little area right here, will be a little bit of a support. So something to keep in mind. It may even happen next week, but we'll see. Because that's on the daily, it may take a minute to get there. We could have some news or something else to drive it up, world event drive it up, but we'll see what happens there. Tomorrow's another day. So I try not to look too far back just due to that. So right now we're looking pretty good still. Got a lot of downward curves in the market. We got a strong downward curve Friday, and then that just kind of continued momentum through into the open. Held for a second, and now we're just getting a few little fake pushes and then a strong 15-minute down. So now at this point, we have our 15-minute signal. Why is that not working? There we go. There is that 15-minute signal off of that level that we drew. It's using the resistance now, so that is more than likely going to be one entry point short off of that 15-minute simple step strategy for you. So there's a signal if you're taking that strategy and practicing that. Not guaranteed to work, but it is a viable and valid signal. Once price gets up there, one thing you could do if you're a confirmation trader, you could wait. One validation point regarding that would be that as long as price comes back and typically will not do any worse than 50% between the closing of the candles, the close and open. So you would take this kind of area. Another thing you could do, I actually consider a doji, this right here with the open and close, to be a very strong level. And then you have the open here, the close here, and then you also have a lot of orders here. You've got another level kind of back here, so this should be a pretty solid signal. And then it would be invalidated, but not completely, by getting a close above. It would be invalidated for sure with a close above this Fibonacci zero. Let me get a little zoomed in so you could probably see it a little bit better. So I'm using the Fibonacci to measure basically, but from that doji to that basically close of that green candle, if price closes above there, the signal is invalid. Sometimes it will often go to the halfway point or just a little bit beyond it and then dip out of it. But if it does actually close above here, this signal is no good. So that kind of works pretty much through and through, even all the way down to the 5-minute. Although once you start getting into these shorter time frames, it's a very weak signal and it's quite unreliable. So just try to keep that strategy above the 15-minute. You'll also find that oftentimes on a 4-hour chart, hourly chart, you'll get that set up, but it's going to be like a couple of times a week. So you can't expect too many entries with that setup on that chart. You may have to look for some different setups. So right now the entry is going pretty good. Everything's flowing along. We've got 8 pips in gain. Don't really see any reason to close out yet. Still going in our favor. Got more momentum coming in here. That is one of the best uses for that curve. Not only do you have the indication of buyers, and I'll turn this off to go back to show an earlier example. Right here, notice the little curve in the pattern and candles, and then all of a sudden it erupted topside. It was actually going for that fair value gap right there, filling up after the open. It already filled itself from the gap close and open, but that little curve drove it back up. Then we had the liquidity run, pushed it back down. Then we have the little curve there, pushed back down, a few gaps. It was low volume though. It was an Asian session. Then we started getting right prior to the news, and now we're starting to head back down again. We're getting a little bit of a curve right there, but I'm looking more at the top side right now just because we are on a fairly strong downtrend. But I'm going to be keeping an eye on it to see where it goes. We've already backtracked a half a pip now. Still working with about a 4-point spread. A lot of times, even though it's scalping, it's supposed to be fast, you still have to wait. There's a lot of waiting involved in trading. If you end up just rapid fire trading sometimes and it's not a momentum type consolidation, you will invariably just waste money. So even with a cheap account, there's something to keep in mind. So there we go. We got that little bit of a curve downward. I'm only looking at closes. The main reason I do that is because there's so many robot traders out there and so many indicator traders out there, and every single one of them uses a close. So I'm going to use a close to watch them. I see you. So we'll just see how much deeper this goes, or if it is going to turn around, because we do have some institutional players active. They could get active at any moment. That's one thing you've got to watch out for. The euro does like to go the wrong way first, so it could very well turn at any moment, or it could just fall out. Looks like it's going to drop a little bit lower, though, the way these closes are working out on the 1 minute. Even though you're in a trade, you had a plan when you entered. The main part of risk management is keeping up on your trade to make sure it's still in line with your idea. One thing I would recommend to a lot of traders, especially just starting out, is to try to make an idea based on what you think may happen, and then try to look a little bit further ahead and try to plot the entry. Try not to jump in right away, but try to pick out an entry point and then see if price is going to line up with going into your entry point. And if it starts to go into your entry point and you start to see smaller candles, wicks in the opposite direction, or even just some stronger pushes in the opposite direction, even though it's still slightly floating up, then you're a lot more confident that your idea is going to work because it lined up going into the entry. Now, if you had the idea and then all of a sudden it just fell out, don't chase it. But another good advantage to waiting and setting an alert at your price level, like say for example you wanted to put an order right above this box, or you wanted to go right up here, you don't exactly have to wait for it. You can actually place a alert in TradingView or something along those lines. If you have MT4 connected to your phone and your computer up and running, it can notify you that way. If you use an MT5, I believe it's probably the same way. I haven't looked to set that up. I've got MT5 on my phone, as well as MT4, and I'm usually looking at that as I'm also doing whatever it is I'm doing. So it's no issue. It charts the chart to me. It's what I'm looking at is what I'm trading. I'm actually trying to trade what I see. I'm not really looking at, this specific strategy, that specific indicator, that specific setup. I have a couple of different setups that I look for, some patterns, double tops, bottoms, your basics, your flags, pennants, so on and so forth. But a lot of these patterns I don't give a lot of merit to on the 1 minute. I am always trading to the higher time frame, because that higher time frame is going to influence where this ultimately ends up. And I know we came from way up top, and we still have a lot of pressure in the market to go down because of that big move. And then it's trying to uh, take some type of reprieve, some type of retracement, but the sellers are just not done with it yet. They're ready to take it down deeper, I think. So far everything's still lining up with that little plan there. So we'll see how it goes a little bit further along. 30 minutes into the trade so far, so not a quick day today. Could be a slow one. Still kind of keeping with that theory. Got a lot of chop into the ticks. Nothing really useful there right now. Hopefully we'll get that drop out here pretty soon, because that's the main thing I'm looking for. Got a failure long. I would actually kind of rely on that. It's also lining up on that level, pinning right into that level, coming out. We've also got a larger setup on the 15. If we look right there in this area, right there, consider that whole little gap It kind of breaks the consolidation box, but then we also have to look at the larger consolidation from the open to this point. So it looks like it's kind of in the middle, but most of it's kind of pressurized to the down. Then we had fake out top. Now we're dropping back down. We are getting a little bit of a change in the volatility. It slowed down. It may try to pop back up. I'm going to stop it. I'm going to see if it pops. Should come back to about right in this area. We've got a little bit of a gap edge imbalance right there. That is just on my side of the view. It could be totally different. TradingView does tend to show smoother candles even though there are gaps in them. So that's just something to keep in mind. I can't add any extra positions or add any size or anything like that. I've got just enough margin for a 0.01. So pretty much I have to be right. So we'll see where it goes from here. I can't even afford the whole stop. I'll get liquidated before it. There's just not enough in here. It's the toy account. So let's see where it goes from here. I'm going to keep that little box in mind. I'll look at the smaller one. And the center line of it also goes down with that level. So that makes it a little bit more relevant to be picked as a good zone. I think price is probably going to pull back up in here just a little bit and then come back down. May even break through here and come up a little bit higher. Reach up because I know there's going to be some liquidity sitting up here probably. The trick to the 1 minute is about staying calm. You have to stay calm. You can't be attached to your risk. You just have to focus on the bigger picture. As long as you're trading in line with a higher time frame trend, more than likely you're going to end up right or at least getting some type of gain out of it. So that is one thing to just keep in mind. Oftentimes when you're trying to catch these reversals, you're all the time trying to call bottoms. Oftentimes it doesn't work out, which is why I've kind of said before that if you're looking to basically be a sniper, it's very unlikely for you to get very many good entries and good trades. Very often you're going to get stopped out and then it's going to go where you predicted it to be, and if you just had a little bit more of a stop on there, it probably would have worked out a little bit better. Oh, yep, wrong box. Okay. Put that away. Think we might still go down. Waiting for a little reaction. We should be close. Got that little bit of a curve up. It may not be worth much though. It's an example of where 1 minute signals are not very reliable. Is what this may work out to be. But that's no issue. Now, if you do have a larger account and you're looking to copy this, I'll go ahead and just add this as a note. You can check out my video on how to scout like a pro. That covers how I would actually view the risk. Right now, I'm just basically using $4 a trade because unless you have about $300 in the account, there's really no use in trying to tie a percentage to your risk. You more or less have to look at it in a dollar amount, because if you're looking at 1% and you've only got an $88 account, that means your stop size at most at 1% is 88 cents. But then you also have to account for your commissions, which is where those hidden costs can tend to creep in on some of the new scalpers. So that's why I kind of advise against rapid fire trading, especially right in here, like I talked about earlier with that tight range. Still got the momentum, but it's just waiting for better prices, I think. We had a big strong push there. There's probably some more waiting to be filled up here still, so we'll just have to wait on it to get there. Does anybody have any questions or any kind of things that they have concerns with on their trading or anything along those lines that you may need a little bit of help with? I want to make sure that I try to answer as many as I can, especially in comments that I have, because I know the community does raise quite a few different points. So I'm always open to discussion and new ideas as well. This is all I'm looking for is new ways to improve. So anything I learn as well, I'm also gonna share that with you guys. So I'm always looking to figure things out, run some new numbers. I might always end up with another calculator. Yeah, that's coming up. See what that does. Scrape a few more pips out of the market. Excuse me. Sorry about that. How much pressure do we have behind it? How little orders? There's a lot of orders going through the market, it looks like. The up down ticks indicate an order was executed, probably at a significant amount lately, but pretty sure that's about close to what it is. Oh no! The stream cut just a little bit. Loading. Always loading. Give this one just a few minutes. I don't want to give this one a whole lot of room. There is no hedging allowed on this account. So if I hit this button, it will actually flip it to a 0.01 as a sell. Because right now I have that set as a 0.02. So it'll close out, it'll sell out this buy, and then place another 0.01 in the market. One way to take advantage of a non-hedging account for speed and order execution. It's all about patience, even on the 1 minute. As long as you're keeping an eye on the larger time frame, larger picture, it makes a lot more sense of what's actually going on in the shorter span of time. Because notice we still have only moved about 10 pips, and this has only been 45 minutes. So that's not a whole lot of movement, and it's actually quite a bit of time. So It's not quite as fast as it may appear. Oftentimes, especially like when you get into consolidation, like in this area here, and you have the chart automatically sized up, this looks huge, but it's still 10 pips. It's hardly anything. So that's one thing to just keep in mind, and hopefully try to keep the panic mode down, because I know it's very easy to get into panic mode. If you're just new to scalping, I would actually recommend trying to trade the Asian session. It's a little bit harder, but it is a lot slower. You're not going to have these 40, 50, 80 pip swings to have to fight with. So your risk will actually be better protected by trading something that's a little bit slower. And I would also advise probably the Euro USD if you're a little bit new to a faster time frame of trading, because it is a bit more stable. And if you're trying to scout with the JPY or trying to pick another pair just because it moves, keep in mind that it can also move against you just as fast. So it's much better to practice and get a little bit of skill, get a little bit of a feel for it on a pair that's a bit smoother. Um, I know scalping is a popular method, so I'll try to give you as many pointers to getting started with it if you're new to it as possible, because I know uh, quite a few will still probably try to do it anyway, so I'm going to try to help you out with it as best I can. So as long as you keep in mind a few different things, such as trade for the higher time frame, try to stay in line with the higher time frame. Don't do what I'm doing right now and counter trade, wait for a pullback topside, then go short again. Don't try to trade back into your entry, because oftentimes, especially starting out, that will come back to bite you. Usually that happens because you will not instantly close out. I'm only looking at 3 to 4 pips, and I'm going to flip this. And I'm going to actually flip it right now. No, I don't have enough margin. So I have to do this. No problem. We're starting to get below this little consolidation area, so that's why I'm making the call. I'm going to take the small little hit and risk and see if I can keep things going in the positive side for the equity. Especially because we're starting to get some more red back in that candle. And we've got the close of the 15-minute coming up in about 3 more minutes. 2 more minutes. 2 minutes and 4 seconds. So I think we're probably going to get a little bit more of a push down now. That's also in line with the market overall. Probably should have held it. It'll be alright. Can't win them all. Hmm. Could be having some more view issues. It's giving me another error in the YouTube. I'll have to do a little bit more learning about streaming. First time, so the fact that I got it up and running and that you can hear me, I think is quite the accomplishment. I'm just kind of poking it to figure it out and see what happens. So trying to play with the settings a little bit more and see if I can get a little bit better output of it. But I'll have to stop the stream. I'll try to look at it a little bit more before the next stream. Keep this stream going just a little bit longer. Still a bit slow tonight. Didn't really get any action on the open either. They opened about right in here. Not a real strong push out of the market today to open. This could be a slow day. Still got that downward momentum. We could be breaking down though. Still got the higher time frame lineup. We are getting a little bit of a curve out of the 5, so I may just have to wait for a little dip, cut it with no gain or anything, and just see what it does. Now, had I had more margin in the account, I've only got enough to buy a .01, but if I had enough to buy a .02, it would have flipped the position and just applied a new .01. Naturally have to be able to buy 2 positions, but basically the same thing happens. It just happens with the delay by closing out and then selling the other one. I think we're going to continue from here. I think we're in a good spot. Fun little waiting game. I'll have to try a New York session there later on. Get a little bit more in. Give this one a little bit more time. We do have the trend line too. Coming off the top. So we're lined up with that right now. Just draw it on there. So that's lined up with the idea still. Just need to wait and see if it breaks that line, and I'll close it if it breaks that line and go long. Recover the little bit lost, and look for the entry probably right there or in this area here because there would be a level. We'll see if it carries on downward. I think it's going to carry on downward. Got a lot of selling pressure showing right here with the wicks on top. Still got the full red pattern with the pin bar off the level, so we could have enough selling pressure in there to knock it on down. Starting to get a curve in here too, but the 1 minute signals are not quite as reliable. We've also got our little area here of our setup that kind of lines up on a short time frame. You don't see it much here, but if you zoom in a little bit, this I would actually consider to be valid as part of the setup because it's a tight group of prices. Right now we're retesting the bottom of it, showing that it is going to be good resistance. We've got the trend line coming down as well, so I think that would be a valid short. See if we get the fallout. One other thing to keep in mind, we've also got the wick there. We've also got bottoms around in the same area. Notice that yellow line, follow it over, it lines up on another bottom. So there is a double bottom there that has broken, so it's a good plan to actually look short too because of that. We've retested the bottom of that in this little area here and come down, so that is a higher time frame lineup with our trade as well. So that gives us a much higher chance of success of coming out short than trying to go long and catch a reversal, because more than likely this thing's going to keep going down. And although slow, it is managing to do that. So we'll just give it a little bit longer. Doesn't look like it's going to be a very actionable night though, being as it's almost 3 a.m. for me. So if you're in the UK or the other side of the world, good morning. And I wouldn't plan on too much until probably the New York session. We might get a little more action. We are getting a good drop out here, though. Got that momentum curve showing in, so we could get a good drop here. At the 107.6, which is typically the point 00 whatever. The 60s are generally pretty strong on the euro one way or the other. Price is going down, it will typically use it as resistance and continue going down. Occasionally you can see a reversal off of it, but it will have to work a little bit to get that reversal. It's not quite as reliable as it used to be last year. That's just one example of price changing over time. So you kind of have to be careful with your backtest data. Things will be different then than what they are now. It'll be different market conditions, so the currency pairs may be reacting or acting just a little bit different than what they were even just 6 to 8 months ago. So you have to kind of take the back testing with a grain of salt, I always say. I've also said a few times that you can pick out several points of data where a certain strategy works, and there would be several other places where it doesn't work, but you can pretty much screenshot that one spot where everything worked and you got like a 90% hit rate, and then suddenly say you've got a product, but then everybody tries it, it doesn't work. I'm sure we probably all run into that experience. And oftentimes it does require discretion to use the strategy. So I kind of feel that I'm glad I started and stuck with the discretionary style instead of trying to go with the mechanical rules based style too much, because uh, even though it did take me longer to learn how to read the market, read the charts, and do everything, because there's so much more to consider in the long run, I feel like it's a lot stronger understanding of the market and knowing what to do when and what tool to use, because basically all these different drawing tools, the Fibonacci's, the indicators, the technical analysis, all of these are just tools to help you make a decision. When it comes to technical analysis, it's how you interpret the market. It's how you see the market. So I could give you uh, basically, all these different marks, all these different lines. I could tell you how I'm finding my marks, and you will pull up your own chart and you will see it a different way and mark it out a different way. So, just like trading styles and how we all trade, we're going to do technical analysis different, but typically, those are kind of the things I'm looking for is peaks, wicks. I'm looking at the overall price of things. So, a lot of these lines are just references from different other points that I'm keeping in mind as I'm viewing the current price action. So just because we had a double bottom here does not mean this is guaranteed long. I'm still seeing short, so I'm just going to stay short. If we do happen to break above this area, that's when I may consider a long again. We are starting to get a pretty stiff sell-off, though. That is one thing I noticed in the news too. The dollar had a pretty good sell-off, I believe. Yeah, the M3 is a good one too. I know. I think Oliver Riviera, he loves the 2 minute, and they it makes some pretty clear and interesting setups on the 2 minute as well. I like a couple of his setups. I actually use one of his. He uses the M2. There's a setup that he loves that he kind of pointed out. I noticed a long time ago. But take a look right here in this little area. This is actually, it's a larger time frame, but that is key Oliver Riviera right here. This is him all day long. We had a break above the trend. It's getting a strong push down. That does not mean it's reversing. That means that is a strong liquidity grab. He will actually take a long right around in here or somewhere at the bottom of this candle, and he will ride this whole candle up to the top, close it out after 15-20 minutes. He will get that whole candle plus the rest of this doji by using that strategy, and that's his setup. It'll trend, it'll pin, and then it'll rocket. That's his setup all day long. So, just a little nugget there for you. If you're looking to do, looking for another short term time frame setup, you'll also see that on higher time frames. Just because it goes down really hard after it broke a level, if you see it to start coming back up just as fast as it went down, hop in and hang on. If it comes down and doesn't start to come back up, then it probably is going short. But if it shoots back up after it comes back and pierces the level, probably going to pierce the bottom of that candle, it'll shoot right back up. You hop in right there at the close of that, boom, you get that whole move. So that's one of his ways of doing things. Still got a strong downtrend going, so we're in good shape. We do have a trend line of possible resistance. I'm going to go ahead and take this guy right here and see what happens now. One thing I've noticed about price action, trend lines carry more relevance and more strength than horizontal ones. They have more weight, more relevance, because everybody is seeing these downward lines. They're all thinking short, so you have a majority of the opinion of the market thinking short. So anytime they're actually watching these levels, now you're going to look for bottom pickers to be watching this. Price is coming down to the top of it, so you got your bottom pickers. They're going to start buying it up. We may take it back up into this little area here. It's not a great setup. It's not a big setup, but we've got a little something here. So if price manages to struggle right in this area here, I'll hit short again. I'm not going to take the long because I don't trust that. I think I'm still more or less looking at this setup, but I'm going to take a look and see uh, basically if we get anything that lines up in this little area here. Don't do that. There we go. That'll work. I'm basically just looking at that little area right there. So we'll see if we get any kind of reactions, rejections, or if it just continues to fall out. So far, pretty strong night. Had some good pre-market opens. A couple of small little scratches here, but let me pull up the history here. We'll take a look. There's all my playing around. Let's go to today's. Sort by date. Where are we at? Right there. That's where we started the day. All these little nickels are my commission. They take it out both sides, nickel on each side. So we got a 5.9 pip, a 7 pip, 0.46. I lost 7/10 of a pip there. Another 7.8, 1.7 lost. The one we just took a minute ago, and then I just closed out that 7.6. So even just these little cuts here and there, I've got 10% on this little puny account today. So it's not $300, so the percents don't count. But after all trading costs, no, actually that's considering, I don't know if I can filter this by date. I have to check my MT4 app on the phone to sort by date, because I've done better than that today. I'm at 318 after costs. Total gain was 398. I paid 80 cents in commissions, so I'm at 318 for the balance gain today. And that's from pre-market, doing a little scalping, and then the trades we've taken in the video at this point. So just a couple of little scratches, and yeah, see, price did react. It's starting to revolve back up, just like I had kind of anticipated, so that was a good call on closing that. Let's see. don't know if we're going to get too much going on. We may just end up ranging. We'll see if it falls out a little bit more or what it's going to do. Got a new hour clicking in, 3 o'clock. Not a whole lot of action there. Not a whole lot of action at all. I think we're going to end up having a slow session, so I think I'm going to end out the stream here. It's a little bit late for me. I think I may need to get a nap as well, but I will be back on another live before much longer. Probably sometime later on today or uh, so on and so forth. There's going to be several more lives. I actually kind of like doing this. This is one of the intentions of the channel since day one. I've always wanted to just hop on, start streaming, and just start clicking out some trades, just like people play Call of Duty on Twitch and so on. So this is what I've been wanting to do for a minute with the channel. I think this is probably also the best way to answer questions and help out the most, to try to get you on the right track for being profitable and having some success. So we got a little bit of a channel here. I think we are still going to see a reaction off of this point. We still got the level here and the level here. So just keep that in mind if you are going to carry on and looking to trade after the stream. I'm still going to be thinking downward, but I'm going to just give it a little bit of a rest. Just being kind of sluggish through the open of the week. And that's kind of a typical thing. There were 20 pips in there. Did get a majority of those. I got 18 of them, so I'll take it. Been scraping a few pips here and there. Pretty good little read today. Pretty on point with what I'm seeing, what I'm looking at, what I'm thinking. Everything's lining up. So definitely on for trying to do the new challenge with a higher account. Check that video out because that is the entire focus of running that series, is to prep and make sure that I can clear the requirements for the challenge. And I'm not just trying to clear it, I'm trying to clear it quickly. One of the things I noticed from running that strategy that I did, it is very successful. It does work. I've used the mechanics of that strategy for a long time now, and I've either gone flat or come out with a profit at the end of the month usually. So I do firmly believe in that setup and system from hybrid hedging. It is very reliable. I would recommend checking that out if you're looking for a good way to try to increase the odds of making back more than what you've lost up to that accumulated point, because it does use a little bit of the idea of sizing up slightly. It is not a full martingale size, because you're only adding just a little bit more each time you enter a trade to make your trade more valuable, so that way you can win back 7 or 8 losses in just one trade, and it doesn't have to be a massive good luck trade. I try to keep everything mathematical. I try not to make anything based on luck or hope, because I don't feel like those are ever a plan. So give those a try if you're having a little bit of difficulty with being profitable. Steps to being profitable is also another good one to check out, because I kind of explain using that system a little bit better. And then I also have some other ideas, like a 15-minute strategy if you're looking for something a little bit faster, but you're not quite ready to scalp. But if you do take up an interest in scalping, or you want to do a little bit of a short-term style trading, definitely check out the video right before the live, where I had a practice session of scalping. And again, that's that challenge prep. So I kind of explain all of the setup, how I determine my risk, what I'm looking to do. It's also a little bit more explanation on what I'm actually doing right now in the market with this style. That will work on any type of time frame. Just keep in mind that higher time frames mean larger scales of moves, so you may have to consider larger stops. I'm using a 40 and I'm on the 1 minute. So if I were to do this same strategy on the hourly, I would probably be looking at 90 or 100 pips for the stop loss, but I would be only looking to give up 20 or 30 at most. So, I mean, I would still look for that arbitrary 30 pip stop, but I would try and avoid getting wicked out on a huge move and try to wait for a pullback. So if I was going short and suddenly price shot up, I would try to wait for price to pull back and then close it out there, because a 100 pip stop would be somewhere up in this area. So yeah, that would be about 100 pips right there at the top of this peak. So basically, if we shot up from here and I had a short position on with my stop up there, well, eventually it is going to pull back, and when it comes back around here, I would nix it there. And then I would only take about, like, say, for example, a 30 or a 35 pip loss instead of taking that entire 120 pip loss. So that's kind of the idea behind the strategy and how you can apply it to a higher time frame if you're not looking to get on a shorter time frame. Just keep in mind that over time, the shorter time frame does use this technique a little bit more efficiently. Um, well, I think I'm gonna let it go from there. It didn't quite reach up to the trend, but it's not quite rocketing down. I think it's just gonna stay slow today. So I'm gonna go ahead and cut things off and come back in another session. Maybe later on today, if we're getting some movement, I'll hop on, or if not, I'll just wait for another day. Trading is a marathon, not a sprint. We're not going to make $1 million in one day with a $25 account. So just focus on some practice and study, I think, would be a good idea today, instead of trying to catch every little turn and move and end up getting chopped out in the long run. So I will catch you guys on the next one, and enjoy.